Hi dear friends, how are you all? Welcome to YouTube channel HR Tutorials India. In this video, we'll discuss how to fill investment declaration or TDS declaration form. What is investment declaration? Before getting into how to fill investment declaration, let us understand what exactly investment declaration is. At the beginning of the financial year, you have to just make an estimate of investment that you intend to make. You don't need to submit actual proofs until the end of the financial year. You can actually invest less or more. The eventual investments don't have to exactly as declared. An investment declaration form is a provisional statement that has the details that you proposed investment and expenses that are income tax deductible. At the end of the financial year, you need to provide supporting investment proofs for these investments that you have specified in the declaration form. Employers ask for this information because they want to calculate your final taxable income after deducting the tax saved through Section 80C investments, house rent allowance, home loan and medical bills, etc. Based on this information, you can cut constant amount of TDS tax deducted source every month. In simple words, every employee in a company during the beginning of the financial year has to fill and submit a investment declaration, which is an estimate of income tax savings which are the exemptions from income tax. This declaration form is an estimated statement and need not submit any actual proofs until the end of the financial year. The declaration form consists of estimations which need not be exactly because it is just an estimation which could be less or more as per the declaration. An investment declaration form is a provision statement that has the details of the process investments and expenses that are income tax deductible. And at the end of the financial year, it is the responsibility of the employee to submit the supporting documents as proof to the employer for the investment declaration which is made at the starting of the financial year. Employers ask for this information because it will make the employer or the HR to calculate the final taxable income after deducting the tax saved through different sections, that is 80C investments, HRA, home loans, medical bills, etc. And based on this information, the employer deduct the tax, that is tax deduction as source, every month and pay to the income tax department as per the income tax slabs for a specific person as per his or her salary per annum. To calculate TDS, your employer considers declared investments and expenses that are either tax exempted or eligible for tax deductions under the Income Tax Act. You need to submit both IT investment declaration form and investment proofs to your employer. If you do not submit the required investment proofs at the end of the financial year, either because you have actually not invested the money as required, or even though you have invested, you could not upload or submit the proofs to your employer will recalculate tax liability and will adjust the additional tax in the remaining months. As said, the income tax declaration helps the employer to calculate the investments and expenses that are either tax exempted or tax liable are eligible for tax deductions under the Income Tax Act. It is the responsibility of the employee to submit income tax investment declaration form and the investment proofs to the employer. If the employee does not submit the document proofs to the employer by end of the year, either because they have not invested or they have forgot to upload or submit the proofs of the documents to the employer will recalculate the tax liability for that specific employee and adjust the additional tax in the remaining months for that specific year. Still, if you miss submitting your investment declaration form altogether, you can still file your IT returns with the government before the 31st July deadline. You can declare investments in your ITR and claim a refund for the extra tax deducted. However, this will involve a wait for some months for you to be able to get the excess tax deducted back into your bank account. Also, IT refunds are only processed once you file your ITR. There are chances that an employee still miss to submit the investment declaration form altogether along with the document proofs. There is a chance for an employee to file the income tax returns to the government or the income tax department before 31st July, which is the deadline for that specific financial year. They declared investments in the ITR and claim a refund for the extra tax deducted and paid to the income tax department. However, refund claim involve waiting period for few months to get the excess tax deducted back into their respective bank accounts. But the IT refunds are only processed once the ITR is filed. Tax exemptions and limit on salary. Now let us see what are the tax exemptions and limitations on the salary. Section 80C, deduction on investments. The limitation is 1,50,000 per annum. Which includes home loan principal, ETF, life insurance premium, ELSS, tuition fee, and NPS. It also includes fixed income deposits, which consist of Sukanya Samriddhi Yojana until the daughter's age reached to 21 years. PF and VPF, Public Provident Fund and Voluntary Provident Fund, with a period of 15 years. Post Office Deposit and National Savings Certificate. These are the investments or the exemptions under the Section 80C. Interest on home loan under Section 80C and Section 24, and the limitation is up to 2 lakhs. Section 80 TTA, deduction from gross total income for interest on savings bank account, and the limitation is 10,000. Section 80E, deduction for interest on education loan for higher education or higher studies, and has no limit. Section 80EE, deductions on home loan interest for first time home owners, and the limitation is 50,000. Section 80G, differs, deduction for donations towards social causes, and the limitation is 50%. Section 80D, deduction on premium paid for medical insurance, and the limitation is 25,000 for family and extra 25,000 for parents. Section 80DD, deduction for rehabilitation of handicapped dependents relative, and the condition is 40% disabled, deduction allowed is up to 75,000. 80% disabled, deduction allowed is up to 1,25,000. Section 80DDB, deduction for medical expenditure on self or dependent relative. The actual amount paid for medical treatment is up to 40,000. For senior citizens aged between 60 years to 80 years, the limit is 1 lakh. So dear friends, hope you understood what are the different types of tax exemptions and their limitations on salary. Now let us move on to the main topic, how to fill the investment declaration form. How to fill the investment declaration. As we have discussed, every company shares this investment declaration form to each and every employee in the beginning of the financial year, so that as per this declaration form, the HR will assume the initial investment what an employee would like to declare, and accordingly the taxes will be calculated as per the income tax slabs with respect to the salary of each individual employee. Now let us see the theoretical part, what are the different sections will be there in the investment declaration, then we'll see practically how to fill the investment declaration form. This form consists of basic information of an employee where we need to fill the details. We'll fill all the details in an Excel sheet which I'll be showing in some time. Then comes the section 1 which is related to HRA, wherein we need to fill all the rental details with respect to the house rent allowance. Section 2 which comes under the category chapter 6A, which consists of standard deduction, 80D, 80DD, etc. Then comes section 3 which is under section 80C. Then section 4 which is related to 80CCG and 80TTA. Then section 5 under section 24, interest on home loan. Then comes section 6, 80EE, interest on housing loan. Then comes section 7 which is related to the income from dividends and other source of income. Then finally section 8 which is a declaration where we need to fill the details of an employee and sign it. Now let us see how to fill this investment declaration practically in an Excel sheet. Friends, I have already created an Excel sheet consists of all the categories of investment declaration form. Let us start with basic information of an employee which need to be filled. Employee code. Here we need to fill the employee code. Then comes full name of employee. Then the CTC. Here we need to fill the annual CTC. For this employee, the annual CTC is 9,60,000 per annum. Father's name. Then comes date of birth. Then comes gender, location. Then comes PAN card. Then comes mobile number. Then comes date of joining. So here the minimum basic details which we have filled. Each company has their own different formats. So here it is one of the format which most of the companies follows. After filling the minimum basic details, we'll move on to the section 1 which is related to HRA, that is nothing but house rent allowance. Here it consists of from date and to date, which means from which month the employee taken a house for rent to what is the duration till when he is in the same house. If he or she changes his or her house from one location to other location, then we can provide the details of the other house rent details. Now let us fill the date. As this financial year starts from 1st of April 2021, this is what the first month which an employee starts his or her rent and ends till 31st of March 2022. And rent paid is around 15,000 per month. And city is Hyderabad. And the rental address. Here we need to fill the rental address. So here I have filled the address of the employee where he is staying. Here the rent is 15,000 which comes to 1,80,000 per annum. So here the rent is exceeding more than 1 lakh. So we need to provide the PAN card of the landlord and the address of the landlord. I have provided the PAN card of the landlord and the address of the landlord. As I am staying in the same location, I have pasted the same address because this is the address of the landlord. Here I am staying only in one location, so I am filling only one row and leaving the second row because I am not changing the location. Let's go to section 2. Section 2. Declaration of savings allowed under section 80 of the IT Act 1961 in respect of savings allotted under Chapter 6A. Here it consists of details which are related to standard deduction, ATD, ATDD, etc. So let us go with each section in detail. Here the standard deduction is 50,000, so straight away 50,000 is exempted from taxes. ATD, medical insurance premium, individual, spouse, children, maximum limit is 25,000, and along with parents it is extra of 25,000, and if parents are senior citizens then another extra 25,000. Here the person has taken medical insurance of rupees 20,600 per annum, so I entered 20,600. Then comes medical checkup. If there is any medical checkup, there is a maximum of 5,000 rupees is exempted under section ATD. As there is no medical checkup expenditure, I am just making as 0. Then comes ATDD, medical treatment for dependent handicap. If disablement is 40% and less than 80%, maximum limit is 75,000, and if disablement is more than or equal to 80%, maximum limit is 1,25,000. Depending upon each individual, they can just make these options and fill the details. Here there is no disablement, so I am just making as 0. ATDDB, medical treatment for specified disease. If patient is not a senior citizen, then maximum limit is 40,000. If patient is senior citizen, then maximum limit is 1 lakh. So if there is any employee whose treatment is going with respect to any specified disease, then the medical treatment has an exemption of 40 and 1 lakh respectively. Here it is 0. Then comes permanent disablement under ATU of SSC. If disability is more than 40% but less than 80%, maximum limit is 75,000, and if disability is more than or equal to 80%, maximum limit is 1,25,000. Which means if a person is disabled, depending upon the percentage of disability, there is an exemption of 75,000 to 1,25,000 for that respective employee. Here it is 0. Then finally comes the ATE, payment of interest on loan taken for higher education for 8 assessment year. There is no maximum limit on interest paid during the financial year 2021-2022. Declaration needs to be submitted. Here, if an employee is taken any education loan, then the interest on education loan is completely exempted from taxes, and there is no limit for interest on education loan. Here the employee is not taken any education loan, so I am just putting as 0. So these are the exemptions under section 2 which Mr. India would like to opt for. So I just mentioned all the details. Let's move on to section 3. Under section 80C of the IT Act 1961. Under section 80C, there are various investments which an employee can invest and declare the same in the investment declaration. It consists of accrued interest on NSC, PPF, life insurance, national savings certificate, home loan repayment of principal, ULIP, mutual funds, pension policy, tuition fee, term fixed deposits, senior citizen savings scheme, ELSS, bonds, post office deposits, Sukanya Samriddhi account. So these are the different investment which an employee can declare and exempt from taxes. But here the limitation is only 1.5 lakhs. Altogether, an employee can exempt from taxes with a limitation of 1,50,000. So even if an employee is saving more than 1.5 lakhs, there is no use with respect to exemption. Hence, it is preferred to save 1.5 lakhs under this section. Here the employee has an housing loan and the principal with respect to housing loan is 30,000 per annum. Then comes tuition fee. Here the employee is paying tuition fee to his children of rupees 25,800. Then comes provident fund. Here the provident fund consists of both PPF, EPF and VPF. Altogether need to be declared over here is 43,200, which is declared by this employee. Then comes life insurance. Here the employee declares a life insurance of 21,000. Total savings comes to 1,20,000. As the declaration is less than 1.5 lakhs, it will be considered, and the rest investments are 0. So friends, we have completed the section 3. Now let's move on to section 4. Section 4 consists of 80 CCG and 80 TDA. Equity savings scheme under section 80 CCG, 50% of the amount invested or 25,000, whichever is less. Here the limitation is 50% of the amount or 25,000, whichever is less, will be exempted from taxes. Here the employee has declared nothing, so I am just putting as 0. The next is deduction IRO interest in savings account 80 TTA. Here interest earned from savings bank account is up to rupees 10,000 is exempted from tax. Here interest on savings has a limitation of 10,000. Beyond that it will be taxable. But if it is less than 10,000, it will be non-taxable, which means it will be exempted from taxes. Here the employer has no income from savings accounts, so it is 0. Now let's move on to the section 5, interest on housing loan. If an employee takes a housing loan, then he or she can exempt from tax with respect to interest on housing loan. Now let us see what are the details are required to fill in this section. With respect to the amount of interest payable on borrowed capital for acquiring construction, renewal, repairing or reconstruction property. Address of the property loan taken. So here we need to fill the address of the property. Then comes the status of property, self-occupied or rent or vacant. If rented vacant, details must be provided in attachment section B for any other income. Which means if the property is not self-occupied and it has been rented, then we need to provide the source of income from rented property. Here it is self-occupied. Then comes the amount of loan issued. Here the loan issued is 20 lakhs. So whatever the details with respect to each employee, they can fill their own details. Purpose for loan: construction, acquiring property. It's for construction. Construction of property will be completed on or before date. We need to put the date when the property construction will be completed. Here the construction will be completed by 1st of May 2021. Then comes date on which construction has completed. We can mention the same date. Date of possession of the property. Proof of possession of property, builder certificate or registration copy, registry copy. Amount of interest paid post construction possession during the financial year April 2021, March 2022. Here we need to fill the interest on housing loan paid during the financial year 2021-2022 from April to March. Here the interest paid on housing loan is 50,000. Then comes specify an amount of interest paid pre-construction possession period. Nothing, 0. Ownership, joint or sole. If joint, name the pension, not applicable. Share of joint owners, if in property joint owner submitted a document, it is not applicable. Whether any sum contributed by joint owner, not applicable. Name of the joint owner, not applicable. Whether joint owner claiming certificate, not applicable. So dear friends, now we have completed filling the section 5. Let's move on to section 6. Even section 6 under 80EE, wherein the interest on home loan has a maximum limit of 2 lakhs. Amount of loan sanctioned, 20 lakhs. Value of the property, 30 lakhs. Any property owned by employee, date of sanction loan, yes or no? No. Total amount of interest paid during the financial year April 2021, March 2022, it's 50,000. So done with this section 6. Now let's move on to section 7. Section 7 consists of interest owned from cooperative society, post office savings bank account exceeding 10,000. Here we need to declare income from different sources which has some limitations. If the interest earned from savings bank is exceeding 10,000, we need to declare here. As it is 0 for this employee, I am mentioning as 0. Then comes interest on dividends, FDs, RDs, bonds, etc. Salary from other employer, 0. Family pension, income from other sources, 0. If you have any details which are applicable for you, you need to fill over here. That's all for the section 7. Down, let's move on to the section 8. Here, the section 8 is of declaration, wherein we need to fill the name of the employee and declare stating that all the details provided by the employee is correct, followed by date. Then finally we need to fill the place. So that's all guys. These are the 8 sections which need to be filled by an employee while he is investing for the respective financial year and submit to the HR department for exempting from taxes. So dear friend, hope you understood how to fill investment declaration form theoretically as well as practically. If you have any queries or questions related to this video, please do comment in the comment section. I'll be happy enough to answer all your queries. And if you like this video, please subscribe and share it among your friends. Thank you very much for watching this video. Have a nice day.